Awesome.
Perfect. Thank you, guys. All right, so I'll give it a couple minutes before we get into any conversations here. Just give some people time to join and say good morning to the community. Hope everybody's day is going well. Hope everybody's week is going well. Let's see who we have here today. Good morning, Drew. Good morning, Aulis. Good morning, Joelle. Good morning, Colin. Good morning, Darian. Good morning, MD Trades. Good morning, Trader Kyra. Good morning, JB. Irfan, what's up? Lundress, what's up? iTrade, good morning. Jared, good morning. How's everybody doing today? Dave, good morning. Jacob, good morning. Kashawn, good morning. Ivan, good morning. Ed, good morning. Duke, good morning. Doug Yu, good morning. Lisa, good morning. Panos, good morning. Hello. Thank you to 2 Degrees and his team. Thank you, Josh. I greatly appreciate the chance to get in here and share some time with you guys.
Absolutely, it's a pleasure to have you. If anybody has any preliminary questions before we get started, you can always pop those in the general chat and or inside of the 2 Degrees live stream chat. I'll be writing down some of the questions and trying to answer the ones that I can answer. The ones that I cannot answer, I will definitely pass along to Ash, and you'll be able to get him to fully answer with him. So, what's going on, too?
Morning, gentlemen. How we living?
Hey, good morning, man.
Good morning.
So, Colin, Ash does use the stat map. He'll definitely mention it and talk about it. That's one of his favorite tools.
Yeah, we do have stat map up here. Why is that there? All right, so I do see people are still joining, so I'll still give it another minute or two for people to join. I'll see who else is here as well. Good morning, Frank. Good morning, Ace. Good morning, Dave. Bobby, what's up? Pascal, good morning. Mark, good morning. Nicola, good morning. Richie, good morning. Trademark, good morning. Chico, good morning. Sub-Zero, good morning. DRT, good morning. Crypto Ice, good morning. Hope everybody's day is going well. Hope everybody's week is going well. Before we get into any information, let's see how everybody's week's going. Throw 1 in chat if you're green on the week. Throw a 2 in the chat if you're red on the week. Throw a 3 in chat if you have not participated yet this week. Okay, a bit of a mixed bag. Looks like a bunch of 1s and a bunch of 2s, couple 3s in there. Very good. So one of the things I was going to talk about this morning, it's one of the ways that we pass evals. I'm not sure if I spoke about this last time, but before I even get into this conversation, there has to be a risk disclaimer. So hear me clearly. You as an independent thinker, you as a business owner, you are liable for your own risk. So it does not matter who speaks to you. It doesn't matter what stream you're on. It doesn't matter what Discord you're in. You assume your own risk. Do not ever think that a signal service is what this is. This is for educational purposes only, and we are not liable for your risk. Please always do your own due diligence before ever considering taking any risk. Okay? I am very happy to share any and all information with you guys, as I always have, but you have to understand that as a business owner, you have to take extreme ownership in your business. Okay, so don't attempt to push off liability onto somebody else because you're sitting there listening to a podcast, because you're sitting there listening to a live stream, because you're sitting there in a signal service. Nobody's going to click the buttons for you. You click your own buttons. Okay, so that needs to be said first because what I'm about to tell you is extremely risky. So you need to assume your own risk. If you are not ready to risk, then please don't risk. If you are not financially stable enough to risk, please don't risk. You have to understand that family always comes first. Health comes right after that. Those are the two most important things in life. So don't ever put those two things in jeopardy. Okay? Now, I know everybody loves to, present some kind of euphoric dream on social media, tell you that, they're day traders and they don't have to work a job or they have this freedom because of day trading. Well, I'm on the complete other side of that spectrum. I'm here to tell you that you should be working because it takes money to make money. Okay? On top of that, that main source of income should always keep you financially stable. That main source of income should always cover all of your bills plus some savings. Then go get a second job. Yes, keep working. Work, work, work. Keep working and work some more because that's what it takes. The second job is what you use to fund your business. Notice I'm saying second job because the first job is what keeps you financially stable. The first job is what keeps your family safe, what keeps your health safe. Then go get a second job. That will fund your trading or whatever business you would like to start. And it's going to even feel better because emotionally or mentally, you know that that money was supposed to be used for your business. You're not missing any of your bills. There's still food in the fridge. Your daily life does not get deterred by you trying to start a business. Does it take more time? Yes. Does it take more effort? Yes. The people that put that time in, the people that have a reason why that's stronger than any how, are the ones that are going to be still standing here in 5-10 years from now. There's nothing easy about this. Okay? So, sorry to spoil the euphoric dreams that social media presents, but let's think logically instead of euphorically. Let's think in terms of risk instead of reward. Because what matters is your family, your health. Okay? Colin's asking how old I am. I'm 29 right now. My birthday is Cinco de Mayo. So I'm about to join the dirty 30s, and I'm not happy about it. So all downhill after that. Just kidding. Just kidding. I'll buy you a cane. I appreciate you. Uncle Ash. Very nice. Let's go. All right. So the purpose of me getting into that is because I want to show you guys how to pass evals. And we may have talked about it before. I'm not sure. But when you see these guys on social media passing evals left and right every day within one day, well, here you go. This is how they do it, right? They're expediting news releases. Expediting means completing something in a faster process or a shorter amount of time, right? So today's a perfect example because of non-farm payroll. There are certain news releases that provide enough volatility within the marketplace where you can pass an eval with a one-shot, one-kill type of method. So depending on which prop firms you're using, you can easily pass a challenge within seconds simply by straddling the marketplace. Now, I started it with a risk disclaimer because you have to understand that this is just calculated gambling, right? You're attempting to capture volatility. Yes, there's a strategy in place, but you're simply just betting on volatility, right? So if you understand that it's a gamble, you have to accept that it's a gamble. And with that comes the price of gambling. So, you got to understand that, does your prop firm allow one day to pass, right? That's the first thing. Does your prop firm allow news trading? That's the second thing. What's the price of that prop firm? That's the third thing. Right? And I'll go through some examples real quick. Like, for example, you can trade the news on a My Funded Futures expert account because it doesn't have any consistency rules during the eval stage. You cannot do that with a My Funded Futures Starter Plus account because there's a consistency rule. You can't pass the account in one shot, one kill because there's a consistency rule. Same thing with Top Step. Top Step has a 50% consistency rule. You cannot expedite on Top Step unless you want to do it 2 different times, right? Because it's a 50% consistency rule. Or Apex, right? I'm only going to talk about kind of the top 3. There's no reason to go through the entire list. But Apex, you can trade the news and you can pass within one trade. So you can do it on Apex. So that's the first thing, is understanding risk is understanding the rules. The second thing is understanding the price that it takes. And this is exactly why I said that you have to go get a job and then go get a second job. Because it takes money to make money. You cannot trade if you don't have money. Okay? And then second, if you understand that it's gambling, that you have to be okay with taking that risk. So that's why I'm saying go get a second job, because you should not risk your well-being, your family, right? So the main source covers your family and your well-being. The second source, we're already deciding to use that second source specifically for trading. So in my opinion, mentally, you won't be deterred because you know that's what you're using that money for. It was meant to be used for that. That's the first thing. The second thing is the cost of the evals, right? My Funded Futures has all the costs up front, right? There's no activation fees, so they put the costs up front in the initial purchase. Versus Apex. It's a low barrier to entry because after you pass, then there's an activation fee. So now, once again, we're thinking in terms of risk instead of reward. In that situation, it's better to expedite an Apex eval because when they're 90% off and the eval is only $17, it's much easier to lose $17 than $150 or whatever the My Funded Futures number is. So you have to think in terms of risk through multiple different perspectives before even getting to what I'm about to say. If you're not willing to accept the risk, then forget about what I'm going to tell you and just focus on a model. Just focus on learning a model and trading a model, and that's it. Okay? If you're willing to accept the risk, then the next thing I would have to say is you have to have the ability to turn the light switch on and off, right? When you go to Expedite, understand that you're not trading your model, but the moment you're done expediting, you're capable of going right back to your model. You're capable of flipping the switch and becoming a very strict risk manager once again. And you're very disciplined in your model, right? So if you cannot flip that switch back and forth, then once again, please don't do this. Okay, but I'm open to sharing all information. So when you see these people on the internet passing evals every single day, this is what they're doing. They're just capturing volatility. Right here. This is what volatility looks like. It is very clear. It is the largest candle on the dang screen. Okay, so for example, this morning was an expediting opportunity. The expediting opportunities that we use are non-farm payroll and CPI for the sole fact that they are the largest high-impact news drivers. They provide the most amount of volatility. Just go collect the data. You'll see that those releases have the largest moves. So if we know that that is when the most amount of volatility is injected into the marketplace, we can straddle each side of the marketplace to capture those points that we need. Just going to go back to this right here. Right? Because this is what it looks like before the news. And what I mean by straddling the marketplace, it looks like this. Right? And so this is where you have to start doing your calculations, right? Because each prop firm has different targets. Each prop firm has different amount of contracts. Okay? So you have to understand which prop you're using and how many points you need to capture. Just do the math, right? Just do the math. Apex allows a lot more contracts versus my funded futures. But imagine a my funded futures expert account because you can pass it in one day, or imagine an Apex account. We are simply straddling the marketplace just like this. We are setting buy stop, hear me clearly, buy stop orders and sell stop orders on each side. This would be a sell stop order down here. This would be a buy stop order up here. Right? So if price runs higher, it'll trigger you into a long position where your buy stop is placed and you'll be in a long position for the move higher. Or a sell stop, you'd be triggered into a sell order where your limit is placed and you'd be into a short there. Notice there's no stop loss, right? Because once again, it is a one shot, one kill type of opportunity. You either pass or fail. Plain and simple. So if you're not willing to take the risk, don't take the risk, right? If you can't risk $17 because Apex is on another 90% off discount and the account's only $17 during eval, then don't risk it. But if you can risk $17 and you're capable of going right back to your model after you take this risk, then this is how everybody's passing it in one shot. Straddle the marketplace, right? Set sell stop orders below price, set buy stop orders above price about 10 seconds before non-farm payroll release. Non-farm payroll or CPI. CPI is the only other one that I would even talk about this for. So 10 seconds beforehand, sell stop here, buy stop here. Then set your target, right? You calculate the target, obviously, by the amount of contracts you have and the target that you need for the eval. Just go and look and read the rules beforehand. So you have to understand what the target is for my funded futures. You have to understand what the target is for Apex. You have to understand the contract allocation that you can use. Yes, these are limit orders. Sell stop is a limit order. Buy stop is a limit order. And once again, this is not for everyone. This is only for people that are capable of turning the switch on and off and are people that have already proven profitability. Right? Somebody that has a model, that has seen many payouts, that knows they can trade, they might expedite an account because there's no reason to be sitting in an eval when they've already proven their abilities within the marketplace. If you're still in the learning stage, if you're still trying to develop a model, don't do this. If you don't understand how to trade yet, you don't have the emotional or mental intelligence to trade yet, if you're still working on that fundamental education to trading, don't do this. I don't know how else to be more clear. This is only for people that have proven profitability, have a track record showing that they can trade. Otherwise, it is much more logical to get your education first. Focus on developing a model. Focus on collecting the data. Focus on your mental and emotional intelligence first. For anybody that is willing to take the risk, here you go. This is how people are rapidly passing evals. And if you saw the move this morning, you're not going to be able to see the move here because it's replay mode. This thing did an amazing job shooting higher immediately and then came back down. So it triggered the buy stops this morning. You can't see it because it's replay mode. So just get out of replay mode. The initial move for NFP shot higher and gave you the amount of points you needed to pass the eval and then came back down. So there's many people in the community that passed evals this morning. That's what we're doing for the individuals that have a proven model. Right, so when you see that on social media, there you go. It's a straddle on the marketplace, capturing volatility. I would only suggest non-farm payroll and CPI for it. If you need more detailed explanations, we have videos for it. Just ask. I know I kind of went through that quickly. The only purpose to me going through that is because it just happened. If you guys want to throw any questions or comments in chat, we can go over them quickly. After the conversation of expediting is done, then we'll get into live price action. We can watch New York open. It doesn't get people banned. Well, if your prop firm doesn't allow you to trade the news, then yes, you would fail the account. Once again, read the rules before you make any purchases. Prop firms that allow news trading This is how they pass those prop firm accounts. On Apex, you can pass a prop firm account doing this. On My Funded Futures, you can pass an expert account doing this. Would the buy stop be the one prop? Would the buy stop be with one prop and the sell stop be? No. I'm sorry, I don't know why I can't read. Both buy stops and sell stops are within one account, because you don't know which direction it's going to move before the news happens. Put a sell stop below price, put a buy stop above price on one account. Could it work with crypto? There's no timed releases for crypto. I would not do that on crypto. I would not say that it works on crypto. I can't sit here and definitively say that because I've never tried it on crypto, but I know that crypto does not have timed releases, right? Like I can tell you exactly when non-farm payroll is going to occur. I can tell you exactly when CPI occurs. The correlation is not what we're looking for. It's the timed news release. I don't want to use something that's correlated. Does anybody have a 90% off? No, there's no current 90% off discount. It only happens every once in a while. And as a risk manager, you have to understand that if you're not buying evals on discount, then you're not thinking in terms of risk, or you're just simply not patient enough. There's never a reason to buy something full price. Why would you buy a full price Apex eval when they do 90% off discounts every other month? Because you're not patient enough to wait. So always buy on discount. Regarding payouts based on your experience, who is better, Apex or My Funded Futures? My Funded Futures. If we have different questions, then let's save that for another time. I was looking for any questions regarding the expediting. If we're done with the expediting conversation, then we can get into live price action and talk about how we trade, when we trade, what's today's analysis. Yeah, we have New York Open coming up here in a minute. I've been trading for a couple months and I've already seen multiple 80% off, 90% off. Yeah, exactly. Never buy full price. It's plain and simple. Just be patient enough to wait for a 90% off discount. Just be patient enough, wait for an 80% off discount. All right, so then we'll move into live price action as well now then. During live price action, feel free to ask any questions regarding the model, any questions regarding my process or my game plan, the way that I engage with price. Once again, I have no problem sharing any information. Okay, so first things first is I won't be trading today. You will not see me take a position because I don't trade Wednesday to Friday of non-farm payroll week. I also don't trade CPI or FOMC. Please understand the difference of what I'm saying here. Expediting is not me trading my model. Okay? Expediting is simply a way to get into a funded account. That's it. That's not trading. That's why I called that gambling. Now, if we're talking about trading, me executing my game plan, my risk parameters are that I don't trade those days that I just mentioned. Do you use first presented FVG? No, that is not a part of my process. You have a bias today? We're going to go over that right now as we get into the game plan. What is your usual game plan? The game plan every single day is right here. Starts with time. Time is the most important element. I only participate during New York Open. You won't find me participating during lunchtime, PM session, Asia session, aftermarket, pre-market, London. I only participate during New York Open. Time is the most important element. With time being the most important element, we always have to get over here on the economic calendar. Right? Because the other element to time is the news drivers. We have to be aware of when the news drivers occur. Okay? Because the last thing you want to do is be surprised by a high impact news driver, and then your position gets slipped and you end up risking more than you initially intended to. That sounds like something that would cause some tilt. That's the last thing that I want. So it's very simple. forexfactory.com. You have to start on forexfactory.com every single day. This is the game plan. This is me going through the game plan with you guys. Time is the most important element. I'm telling you the elements of time that I use, which is New York Open. That's when I look to engage with price. And I'm always understanding the high impact news drivers. There's nothing worse than your position getting slipped because it's too volatile. Your orders don't get filled, and then account blown, even though you were only trying to risk $500. Just because you weren't aware of a high impact news driver. Okay, so always be aware of the red folders. Just get on forexfactory.com. Make sure you're using the red folder for the currency you're trading. Right, I trade NQ and ES, so USD is what I'm concerned with. That's the first part of the game plan every single time. Second part of the game plan is bias or draw on liquidity. Those two things mean the same thing, in my opinion. Whatever price is reaching for. Right? Price is reaching for a draw on liquidity. That's the intended direction. That would mean the same thing as bias. Lastly is entry function. Not going to sit here and say that one entry function is better than the other. I will sit here and say that the only entry function I use is a breaker plus a fair value gap. Right? Everybody's calling it the unicorn model on social medias. A breaker plus a fair value gap is the only entry function I use. I'm not sitting here saying that one is better than the other, right? If you use change in the state of delivery, if you use inversions, if you use, EMAs, if you use support and resistance, I don't care. Entry functions, all of them work. The operator is what makes them profitable. Okay, so let's go through that game plan now. Like I just said, I'm only looking to participate during New York Open. So you can see that's 9:35 now, right? New York has opened. Then I'm looking for a bias. So I always come out to the daily chart. Come out to the daily chart. What I'm looking at on the daily chart to understand bias is swing highs, swing lows, or gaps. Those are the things I'm looking at to determine bias. What is happening at those locations? Okay, so just do a couple of examples real quick. Swing low or bullish FVGs are a location where I have a bullish bias. Swing highs or bearish FVGs are a location that I have a bearish bias. Very simple. Everybody says internal to external. That's what I'm referring to here. Internal liquidity to external liquidity or vice versa. External to internal. right? So if price had swept a swing low, I'm looking for whether we close back inside the range or we're displacing through the swing low. If we're sweeping the low, that looks like we would close in back inside the range. Like, look at these 3 candles here. 1, 2, 3. These are clear reversal candles, right? The fact that it swept the swing low and then closed back inside the range, that gives me a bullish bias, saying that we need to head back internal. Right? The external to internal relation. Or the other way around. Right? Internal to external. Right? You have a bearish fair value gap that would give you a bearish bias. The 2 locations that I would have a bearish bias are swing highs or bearish FEGs. And it's very clear that this FEG is being respected, right? The first 50% of it, you never see a candle closure past it. Wicks do the damage, bodies tell the story. This looks like a very clear bias in terms of moving internal to external, right? The external would be the swing low. How I'm determining bias. Last thing to bias is understanding invalidation. Right? What would be the invalidation to a gap? Exactly what's happening right now, right? You have a gap here. Price is not respecting the 50% of the gap. In fact, we are completely past the gap now. That's what invalidation looks like. The first 50% of a gap should show the reaction that you're looking for. If it doesn't, you have to start thinking about invalidation. That's what you're looking at here. This would be my bias for today because this is what's currently happening. Right, so seeing that price is invalidating a bearish gap would tell me that price is reaching for external, or you have nice equal highs here too. It's reaching higher. All right, so another quick example, you can see it here as well. Right, a bearish fair value gap. Price clearly invalidates it by closing past the gap. This clearly shows an invalidation to a bearish gap, which would mean bullish bias. So understanding invalidation is just as important as being capable of developing a bias. Once you're capable of developing a bias, that's when you go into an entry function time frame. Right? The game plan was time, bias / drawn liquidity, then entry function. Right? So now that we're capable of creating a bias, that's when I would go into the lower time frames looking for an entry function. And I already told you that I only use the unicorn model as an entry function. So, right, a breaker plus a fair value gap. A breaker has a swing low, a swing high, right? Swing low, swing high, new low, then a new high. The breaker is always going to be found in the between the initial swing low and the initial swing high for bullish and bearish positions. The breaker will be found in this leg of price action here. I want there to be a fair value gap aligning with the breaker. I don't care how much the fair value gap aligns, right? If the fair value gap's like this, only 20% of it aligns with the breaker. It doesn't matter how much it aligns. It either is aligning with the breaker or it's not. Okay, so in this case, you would be short-term bullish, less risk since we're at the top of the range. So first things first, a bias is simply an idea to get you in and out of a position. All it needs to do is get you to look for a certain position, and all it needs to do is get you in and out of that position. I don't care where the daily candle closes today. I don't care where the next 5 daily candle closes. That's not how I use bias. How I use bias is developing an idea for the day for me to find a position. If I find a position, great. After that position is done, I'm going to the gym. I don't care what happens after that. I don't need to know where the daily candle closes. What I do need to know is how to risk, when to risk, and when to stop risking. Now the next part of this. If I have a bullish bias, the locations that I would want to be longing from are swing highs, swing lows, or FVGs. Excuse me, I said that incorrectly. I was talking about higher time frame points of interest. The higher time frame points of interest to find entry functions are swing highs, swing lows, and FVGs. When I'm bullish, the higher time frame points of interest I want to use are swing lows and bullish FVGs. Right? So using time frame alignment is how I understand what's the smaller time frame versus the higher time frame. Right? The daily to the hourly to the 5-minute is the time frame alignment that I use. The daily is my bias. The hourly is my higher time frame points of interest. The 5-minute is my entry functions. Right? So if I'm bullish because the daily provided a bullish bias, then I'm going to the hourly to look for swing lows or bullish FEGs. There's no FEGs here. There's no FEGs here, so there's nothing to point to in terms of FEGs. But we did just sweep an hourly swing low. This is where I would want to be looking for a bullish entry function. Below an old low. Okay? When I'm bullish, I want to find my entry function that's aligned with my bias from a higher time frame level. Now, if we go in here, right, we do get the sweep. There's nothing clean about this, and this is why I'm here to tell you that I'm not touching any of this. Right, you do get swing low, swing high, and then what is this, right? There's nothing clean here. Nothing clean about that. Let me show you something that's clean so that we can clearly see this. Let's go to, what do you want to look at? London session or New York session? Doesn't matter. You guys pick London session or New York session.
Its most popular bot with.
Okay, everybody's saying New York, so let's take a look at a New York session. Here's a London session. Sorry, I know that I just told you to pick, but you can clearly see this one here. So this is going to end up being an hourly swing high here. Right? Hourly swing high. I'll go out and show you real quick. Right, so higher time frame point of interest. Hourly swing high being swept. Time frame alignment moving from an hourly to a 5-minute. What happens at the hourly swing high? We get a stop hunt here. After the stop hunt, we clearly and decisively displace through a breaker block here. Breaker block's always going to be your lowest down closed candle before the leg up that took liquidity, right? So this is taking liquidity right here because we ran above a swing high. That's what taking liquidity means. And we need the lowest down closed candle before that, right? So you saw me make this earlier. And I said that the breaker block would always be found in the initial swing high to swing low there. Right, so if we point those out, you have a swing high here, you have a swing low here, you have a swing high here, then you have a new low here. So we need something in this leg here. Exactly what I'm pointing to here. This would be your bearish breaker. Notice how there's an FVG aligning with it. This is what an entry function looks like for me. Notice how I'm shorting above an hourly swing high. Notice the time, London session. And this is what an entry looks like. Entering at the beginning of the breaker, stop loss at the high, aiming for 2R. This is what a short position looks like for me. This is the very first time that that short position is confirmed. Why is it confirmed? Because of time, bias, entry function. You want to be executing from a higher time frame level during your session, and you need a confirmed entry function to do it. Swing high, swing low, new high, new low. Displacement through the breaker with an FVG aligned with it. If it does not look this clean, do not touch it. Right? And that's why I had to go back into replay mode, because today's price action looks disgusting. I have no interest in it. That NFP candle took both sides of the range. And it's very simple. If you cannot clearly define something, then you should not be risking. If you cannot be patient enough to only accept higher probabilities, then you're not thinking in terms of risk. You're most likely thinking emotionally, impulsively. You have some kind of influence of wanting to take a position. And in my opinion, this is truly 80% mental, 20% chart. So if you can't have the mental, emotional intelligence to take these trades, then you shouldn't be trading at all. This is how clean it should look. Any other time it's not this clean, don't take a trade. That's another euphoric statement on the internet that I highly disagree with. Those people that you see taking 20 trades a day every single day, man, if I wanted a day job, then just go get a career. Like if you want to be staring at the screen all day long, like just go get a 9 to 5. Okay, but then now that we actually have an entry function, entering at the beginning of the breaker block via limit order or market order, that's a personal preference. And you should get that information from your data. How do you best operate it? Do you have better success with market orders? Do you have better success with limit orders? We're all independent thinkers here. So I can't sit here and say you should use limit orders. The only thing you should be referring to is your own data. What provides a better win rate? When I use limit orders or when I use market orders? It's going to be contingent upon your own data. We are all independent thinkers here. So do what is best for yourself instead of listening to other people. And you do that by gaining conviction through experience. Collect as much data by having defined variables so that the data is very clear. Don't switch your model every other day. That's a horrible problem for a lot of traders. You'll never have clear data if you do that, right? If you're testing something and the variables are always changing, then the information, the results are not going to be clear. Like there's a definition to what a breaker block is. Go look it up. There's a definition to what an FVG is. You can't change those things. Those things are mechanical. There is a definition to what London session is. All of the variables to my model are mechanical, and that's why I use them. You can't say that London session is, starting at 9:30 a.m. New York time, because that's wrong. That doesn't fit the definition. Right, so there you go. Whether you want to market or limit right here, go ahead. Lovely. Now, this very moment in time makes or break a trader. This very moment. Because usually a trader is not concerned with, where's invalidation. Like invalidation levels are very clear, right? Just use the swing point. Invalidations are very clear, but what gets people into trouble is taking profit, right? Because you don't want to fall into the euphoria of wanting more. Okay? Because if you're going to be the individual that trails their position, you got to be worried of the position coming back to take you out at break even. If you're the individual that's sitting there saying, oh, this is the one trade that's going to make me rich, that's when you're going to blow an account. So understanding when to be done is just as important as knowing your invalidation. Okay? Even further than that, even further than actually taking the profit, when you're done, be done. A lot of people sit here and say, oh, but I just need another $50 to pass the prop firm challenge. Let me see what let me try to go back in. Yeah, that's the moment in time where you're going to blow the account. If you cannot be satisfied with enough, you're going to blow accounts. If you can't sit there and say that being green on the day is more important than trying to get more profits, you're going to have a hard time making progress. Because you're going to hand back all of your hard work, all because of some kind of emotion of wanting more. Imagine not accepting $300 for sitting here in your t-shirt and shorts looking at a screen. Could you imagine? $300 is more than a daily salary at almost a lot of career jobs. and you're not accepting of that, I mean, that's just the wrong perspective, in my opinion. It doesn't matter what this number is. You weren't supposed to have this anyways. So if you're the individual sitting there saying, oh, but my daily target's $500. I only need $100 more to pass the prop firm challenge. It's just as important to walk away. Again, like if you're going to drive yourself crazy over price action, then just go get a job. Like that's the reason why we came here. We came here because we need some kind of time freedom, location freedom. I understand that we weren't raised that way. I understand that humans weren't geared towards working smarter versus working harder. I understand that, we all went to school, so you had to pass the test, right? People aren't accepting of failures. Trading is the complete opposite. Trading is the complete opposite. It's working smarter, not harder. It's failing as efficiently as possible. You're going to lose. So how do we do that as efficiently as possible? Right. So as efficiently as possible in this scenario is I'm sitting here saying I'm not going to take a trade again because I don't want to have my next trade be a loser. I'll just go to the gym and enjoy the rest of my day. See the difference there? Here, look, let's oh, here it is again. Ready? See, once you can see it, you can't unsee it. Swing low, swing high. Yes, I know it's by a tick, but it fits the definition, right? So swing low, swing high, new low, new high. Breaker block. Breaker block's always found in the initial swing low to initial swing high. Since this is a bullish position, you're using up close candles. A bullish breaker will always be up close candles. A bearish breaker will always be down close candles. Once again, fits the definition and it has an FVG aligned. Okay, so breaker block plus FVG equals unicorn. Go ahead and enter at the beginning of the breaker. Stop loss at the low. Aim for 2R. Right, so you had an entry there. And since we're on replay mode, we can't do limits, so we'll raise this a little higher so you can still get the 2R. But once again, you enter at the beginning of the breaker block. So the entry should be here. Right here. Exactly what the position indicator tool says right here. The replay mode doesn't allow you to do that. So that's why it's higher. But same exact thing. Breaker block plus FVG. Let's make sure there's a higher time frame level in here. We did sweep a swing low here. What's going on my screen? Right? Once again, the definition of a swing low has higher lows on each side of it. So I do like to see that this has a higher time frame point of interest, an hourly swing low. Right, so this fits all the definition except for time. The only reason why I wouldn't execute this is because I execute during New York Open. So look at the time here. But notice the difference. You willing to risk or not doesn't change whether this is a unicorn or not. A unicorn is simply a breaker block plus an FVG. There you go, it hits target. Okay, so you got to see both a short and a long, and these things just played out beautifully. Imagine $712 before 9:30 in the morning. You got to be kidding me. So that's the model. Lovely price action here. Lovely. And see, like, notice how there's nothing clean here, right? So in terms of my model is what I'm talking about. I don't see this, right? Here's a bullish position. Here's a bearish position. Where is this? On either side of the range, right? So let's just point out the range real quick. Swing low here, swing highs here. On either side of the range, you don't have that. You have another swing high in here, so you could probably use this as well. And this is why having a model is so important. This is exactly why having a model is so important. It shows you whether there's a trade available or not. If your model's not on the screen, then you should not be taking trades. Plain and simple. Or else you're just not following the justifications to your actions. Right? And so that's, again, why I can sit here and say, I'm not taking a trade today. Look, ever since New York Open, can you find the model that I just expressed to you? No, it's not on the screen. So it's very easy for me to sit here and not risk. And once you realize that quality over quantity, once you realize that less is more, you'll find a lot of peace in your trading. You'll stop forcing things. But if you take less trades, how do you make more money? If you're always aiming 1 to 2 R, if you have a fixed risk to reward, how do you make more money? Compounding. Not about reaching for more. It's about having more capital. Right? If you're risking $200 to make $400, some people are probably going to say $400 is not enough, right? I don't know why they would say that, but God forbid they said $400 is not enough. Well, what happens when you have 20 Apex accounts? You think 400 times 20 is enough? Oh, that's not enough? Okay, go get 5 more Top Step accounts. Now you have 25 accounts. You think 400 times 25 is enough? Wherever you want to go with this, it's a matter of compounding. It's a matter of having defined justifications to your rules so that you clearly understand how to execute in the marketplace. Then when you can clearly understand how to execute in the marketplace, that's when you go in and collect so much data that it's undeniable. Go trade for 5 years in a row, and if you're profitable for all 5 years, start scaling. Oh, but 5 years is too much. If you can't submit to time, then you're going to be very uncomfortable in positions. Because you can't force price to go to your target. You're going to have to withstand the amount of time that it takes for price to get to your target. There's no reason to be getting out of a trade before it's invalidated. Right? If you get in a position and it's just consolidating at your entry and you go to raise your stop loss into profit so that you only hold the position if it's risk-free, even though it hasn't been invalidated yet, it never went to your invalidation level, you've just robbed yourself of a perfectly fine trade. because you can't sit there and submit to time because you're not comfortable with being uncomfortable. A position's invalidated when it hits your stop loss, when it reaches your invalidation level, not when you feel like price is not moving. The market doesn't care about how you feel. Okay, so I am glad that we were able to go through some of the game plan this morning. I understand we had to look at replay examples, and here's your reason why. There's nothing here live on the screen. So I won't be taking any risks today. I have no positions to point to. I wish I did so it could be a little more exciting stream, but once again, you can't force your opinion upon price. So no position on the screen means we go and look at some examples from prior data. We were able to develop a game plan, right? We were able to understand time and bias, but there was no entry function. So it doesn't matter if you have a bias if you don't have an entry function. So if you guys have any questions or comments, I know I was just going through my entire model there. So if you did ask a question throughout that time, if you don't mind just throwing it in chat again, because I wasn't looking at chat during the conversation, throw any questions or comments in chat. We'll take another 15 or 20 minutes for questions and comments before wrapping up the stream. Is this right or am I? Well, you're definitely not stupid, so you shouldn't say that about yourself. Is this right? So include the wicks as well. Use the entire candle for a breaker. So I do see that you highlighted the down close candles. That part is correct. You just have to highlight the entirety of the candles. Thank you. You provided great insight and strategy. I appreciate the kind response, Mark. Are you taking any more trades after the first one or it's a loss? I only trade one time a day, maximum, 2 times a week, maximum. That is a risk management strategy that has worked for me, so I don't plan on changing it. I tried changing it in 2025. I wanted to take more risk. Come to find out, I'm still only averaging 1 to 2 trades a week. So it's more of a don't fix what's not broke situation at the moment. How long after New York Open do you leave to know that nothing is going to happen? About 11 o'clock. The closer it gets to lunchtime, the less interested I become. I'm absolutely not touching anything by lunchtime. So I'll be looking from 8:30 to 11 o'clock. After 11 o'clock, I'm slowly becoming less interested. 12 o'clock, it's a hard cutoff. I do not touch anything. You have to be in the position before lunchtime. You can hold it through lunchtime, but I do not enter anything from lunchtime onward. I'm also not a PM trader. I specifically focus on New York AM. Do I trade off the 5-minute because of risk to reward? I trade off the 5-minute because of volatility. So there's more noise in the 1-minute chart. There's more candles that occur. There's more price fluctuations along with my data. So I have tried trading the 1-minute. But since 2023 and 2024, my data shows that the 1 minute chart has the majority of my losses. So I try to stay on the 5 minute as much as possible. You have highlighted very well how having discipline to able to walk away is so important. Yeah, so you have to realize that we're not here to become an overnight, success. It's very low probability to think that you're going to hit the jackpot. That's just not how it works. So you have to frame everything around being capable of being here for the long term. Mentally, emotionally, risk management, time management, the whole nine. If I was sitting here staring at a screen from 7 a.m. to 4 p.m., I'm going to be so burnt out much quicker than I would be if I was only looking at the screen from 8:30 to 11. Right? So thinking about my health and my well-being, it's better for me to get off the chart and get in the gym. That also keeps me away from a lot of losing trades. Right? So it's a win-win in my opinion. More time freedom, more health, less chance to blow up. Yeah, I'll stick with that. That definitely sounds like the best way forward. Is there a reason why you enter on the breaker and not the FEG? There's a lot of times where the FEG never gets retested. So in my opinion, I would want the FEG to be a breakaway gap. That looks like the strongest form of momentum. Let it tap the breaker block, keep the FEG unmitigated so it's a breakaway gap. That looks like a lot of momentum. So I do always use the breaker block as the location for entry. What about London? So I'm from the US and I'm on the East Coast. So London for me is 2 a.m. in the morning. I'm just not able to wake up at that time. I normally wake up at like 7 a.m. You can use London. London Open is just as good as New York Open. Just for my personal life, I have to use New York Open. Love the way you talk to people, mate, and your gratitude. I greatly appreciate that comment. I'm a full believer in you have to put the energy into the world that you would want in return for yourself. So I always treat everybody the way that I would want to be treated. And that's why I have no issue at answering any questions, handing out any information, because I would want my I would want my questions answered too. If you can't make money on the 1 min, stay on the 5 min. Yeah, absolutely. I 100% agree with that. When you have a 10 a.m. red folder, how do you navigate that? You have to ask yourself whether you're willing to risk the news. Right? Because if you're not willing to risk the news, then just wait until after the news. That's all it comes down to. If you're not willing to risk the news, wait until after the news. Same thing with the opening time. 8:30, as you can see, the news, very volatile. Just wait until afterwards. How do you collect data? I've been staring at the screen for about 7 years now. So I've been journaling all of my trades for a long time. In my opinion, showing up to live market action is 10 times better than backtesting. Because you'll gain that patience, you'll submit to that time, and that's what we need in trading. Right? Replay mode, you could just click forward and you instantly get a new candle. And that's the issue. Instant gratification. That's not what happens while you're in a trade. When you're in a trade, you're watching this candle bounce up and down for 5 minutes. You're not instantly getting a new candle. So in my opinion, you have to practice how you play, right? Just like a professional athlete. Why is LeBron so good? Because he's in the gym every single day. Put the time in, put the effort in. You have to be willing to sit here during the session. If you get used to sitting here during the session because you show up for your session every single day, you'll be more comfortable with that time that it takes compared to backtesting where you can just click the button, you instantly get another candle. Just very unrealistic. So in my opinion, show up to your session, practice how you play, conduct your business, give it the respect that you would want to see in your results by showing up and putting your time in, collecting the data. Adding time restrictions to your trading life will make you focus on price delivery time and high quality setups. Yeah, that's the reason for it. It's definitely higher quality setups during the opening times compared to post market, compared to pre market. I've been focusing on 8:30 to 11. The New York session begins at 8:30, but you start at 9:30. Can you explain why? I've been focusing from 8:30 to 11 is my time window. Thank you for doing this today. Much love. Thank you for being here. I greatly appreciate all the questions, all the comments. The way that we gain this conviction is going through the information, right? So conviction is built through experience. We have to go through the information to obtain the edge. And that's why I love doing this, because every time you ask a question, it's another repetition for me. That's why I have no issue going over all this information. I don't know why. I guess it's a marketing thing, actually. I do know why. These people on the internet where they're like, oh, this secret model that blah, 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 blah. Like, what are they gatekeeping? We're all watching the same candlesticks. Makes no sense. Everything's free, and it's all right here on the screen. We're all staring at the same thing. So I don't know why people gatekeep. Makes no sense. The other day you mentioned CRT. Are you incorporating CRT in your trading? I'm sorry to tell you, but you're wrong. I've never mentioned CRT. I don't even know what that is. So I would love to know where I said that, because I can guarantee I didn't. I don't even know what CRT is. Are you a friend of the Bills, like the football team? That's funny. I am from New York originally, so not a Bills fan, but I am from New York. That's hilarious. I'm surprised you noticed that. No, not a Giants fan either. I'm actually surprisingly a Rams fan. Can you explain how you see order flow and price delivery? Yeah, swing highs, swing lows, and FVGs. I focus on swing highs, swing lows, and FVGs. Those are the locations that I'm looking at to understand order flow. Right? Is a swing low being swept, or is it being displaced through? Right? Because if a swing low is being swept, right? Let's just go out to the daily again, real quick. Right? So a swing low being swept looks like a candle that runs below the low and then closes back inside the range. This looks like a reversal. This looks like we want higher prices. Same thing with FEGs. Is the FEG providing resistance to price, or is it being displaced through? So seeing that the FEG was displaced through, this candle completely invalidated the FEG, shows that we are reaching higher. So the insight to order flow that I look for is swing highs, swing lows, and FEGs. What happens at those locations? Are we being supported by them, or are we displacing through them? Are we finding resistance at them, or are we displacing through them? That's how I look at order flow. What do you do if you first took a loss on your first trade of the day? I walk away. After documenting the trade, I then close up shop, turn off all devices, and I go to the gym. The results of a position are a byproduct of your process. The results don't determine the process. You show up and complete the process every single day. It doesn't matter the results. Whether it's a winning trade or a losing trade, both scenarios, I'm turning off the computer after documenting my entire experience and going to the gym. It doesn't matter what the result is. Process over results. Focus on the process. Where are you journaling daily? I journal in Discord. My one Discord I've had for 7 years now, along with Twitter as well. Looks like 2 is heading out. Thanks for having me once again. I greatly appreciate you.
Pleasure is mine, brother. Thank you for your time. I appreciate you. Apologies for heading off. Just a busy day, but wanted to be here nevertheless. Appreciate everything you're doing for us.
Absolutely. Have a good day, man.
Much
You
love,
as
brother.
well. Everyone be safe, okay? Peace.
So it looks like, I guess I'll wrap it up too there. We got a good question and answer session in there too. Hopefully, if you guys have any other questions or comments, you could throw it in general chat here. Just send me a tag. Tag me on any questions or comments, and I'll gladly go over any information. But I will wrap up stream there. I don't know if Josh has anything else, but I do want to say thank you once again. I greatly appreciate everybody that was here. We had a phenomenal conversation. So please always feel free to contact me. I'll greatly help any chance I can get.
Yeah, I love the stream today. I just wanted to say thank you on behalf of us as well. And I did promise a giveaway to anybody that was kind of just standing here in the audience still and participating. So I'm going to be giving away 7 free days of their current membership. So you got to be basically an active subscriber in order to participate in the giveaway. And we'll do a quick one. We'll do it for like 2 minutes. And that'll be helpful. So 7 free days added to your subscription. Good luck and happy Friday. So for the last like 2 minutes, we'll just kind of answer any questions that you guys might have. We'll do a quick giveaway. It's Friday. Want to make sure you guys understand that, you know, we're people, you know, we want everybody being happy and positive and blessed. So, you know, a giveaway on a Friday is the least that we can do. So let's answer any other outstanding questions. And if there are no further questions, then I guess we really just want to wish everybody a beautiful weekend ahead, a wonderful and safe rest of your day. And, you know, just stick around 1 more minute and you'll see the giveaway winner pop up. You must be an active subscriber to enter the giveaway. Otherwise, there's no free days to add to your subscription. So Yep. Appreciate you all. So if there's no other outstanding questions and you guys got nothing else for Ash, just please drop a heart in the chat, drop some love. He was taking some time out of his day today to be able to be here with you guys and share some experiences. So definitely
Thank you guys as well. It was a great time. I greatly appreciate how kind and generous everybody was here today. So thank you guys for the great conversation, and I hope everybody has a great weekend.
much love, Ash. You take it easy, all right, brother?
Alrighty, have a nice day.
A lot of love in the chat for you. Very, very appreciative.